Welcome to Flippening, the first and original podcast for full-time, professional, and institutional crypto investors. I'm your host, Clay Collins. Each week we discuss the cryptocurrency economy, new investment strategies for maximizing returns, and stories from the front lines of financial disruption. Go to flippening.com to join our newsletter for cryptocurrency investors and find out just why this podcast is called Flippening.
Clay Collins is the CEO of Nomics. All opinions expressed by Clay and podcast guests are solely their own opinion and do not reflect the opinion of Nomics or any other company. This podcast is for informational and entertainment purposes only and should not be relied upon as the basis for investment decisions.
For the most part, the Flippening podcast is about high production value deep dives into topics that will be relevant for a long time. Our goal is to create reference material that explores the most important facets of institutional crypto asset investing. In the past, we've taken on large topics with projects like our security token documentary or our recent deep dive on programmable tokenized debt markets. We've also covered crypto index funds, publicly listed masternode businesses, momentum/sentiment investing, quantitative crypto investing, and much, much more. We like exploring these huge topics and going deep. But in addition to this reference content, I've always wanted to release topical content that was timely and relevant to the current crypto news cycle. But I really never found a great way to pull that off. There are a lot of podcasts with crypto bros shilling their unedited opinions on price movements or the latest ICOs, and I just didn't want to go that route, especially since I don't personally enjoy this content. I was up one night contemplating how to provide topical content to my listeners when I receive Eric Meltzer's Proof of Work newsletter in my inbox. What I appreciate about Eric's newsletter is that it isn't filled with news hackery or thought pieces from Medium. Instead, Proof of Work includes updates directly from the makers behind top crypto projects. It's almost all primary source material about projects themselves rather than third-party analysis. So I approached Eric about doing a monthly Proof of Work audio wrap-up. He said yes, and here we are. Essentially, what we're going to do is discuss some of the most important updates provided in Eric's Proof of Work newsletter and use this as the focal point for discussing what happened in the crypto sphere during a given month. In this episode, we discuss 1, major themes and trends among crypto projects for the month of August. 2, our 6 favorite features and releases shipped from various engineering teams in the space. 3, which crypto team has won the SHIP Award, which is the monthly award we give to the project that has shipped the most in a given month. 4, why Asian exchanges are absolutely dominant right now. 5, which crypto businesses are making money. And 6, what new developments we expect to see in September. Here's a little background on Eric. Eric is a partner at INBlockchain, China's oldest and largest institutional crypto asset and blockchain fund. To give you a sense of INBlockchain's size and scope, consider that they recently announced a $1.6 billion fund, with 30% coming from the Hangzhou local government, and prior to that, they already had a couple billion under management. If you want to learn more about Eric, check out Flippening episode number 17. I am especially happy to tell you that this episode is made possible by the generous support of pandaanalytics.com. If investing is not your full-time job, but you still want to get into crypto and blockchain, which cryptocurrency should you consider when making an investment decision? One popular solution is a portfolio of crypto assets selected and rebalanced on a regular basis. Panda Analytics is a crypto index research and management company that has software tools which allow you to construct a passive index tailored to your risk level and help you execute the strategy, automating the tedious rebalancing work. Also, Panda created the world's first Proof of Work index fund, a low-cost, complexity-free investment vehicle allowing you to diversify into crypto assets. So why do some folks invest in a portfolio of Proof of Work crypto assets? Here's why. The significant investment dedicated to mining equipment demonstrates a ubiquitous mental consensus, and it has the advantage of relying on the mining community's second opinion. If miners choose to deploy computational resources to support a network, it shows confidence in the network. If you want to learn more about Panda Analytics' website, index fund, and tools, please check them out at pandaanalytics.com. Also, I'm going to go off script here and say that I've met the team behind this and I really like them and I endorse what they're doing. I had the opportunity to review their work and it's pretty cool. They have a free version of their product that you can check out. In fact, Panda Analytics essentially has 3 tools. The first tool is a DIY crypto index fund creator. Again, this one is free, where you fill in a bunch of variables and they create a customized indexing strategy for you that you execute, right? So you execute the trades recommended by this strategy. Their second product is basically the same as the do-it-yourself tool, except they execute the trades for you via API access to an exchange of your choice. Their third product is a fully managed indexed fund. I like the folks that run this. I've met them and they have my endorsement. Also, from the bottom of my heart, thanks to Panda Analytics for stepping in and making this show possible and for making this type of content possible in general. Okay, let's get this started. Without further ado, here is the inaugural edition of the Proof of Work end of month wrap up for August. Eric, what have you been up to in August?
In August, I just got back from Beijing. So I spent the previous month, for almost the entire month out in Beijing, dealing with some projects that were incubating there and catching up with my partners over there. And then I was mostly in Boston for August. I went out to Hawaii for a friend's wedding. So I spent a couple days kind of relaxing in Hawaii. But, I brought my laptop so that I could stay updated on the crypto scene. And, that's pretty much it. I've been digging pretty deep into the handshake stuff, as anyone that reads Proof of Work will have seen. And so we're actually, we're incubating an exchange called Namebase that's going to be sort of the first exchange for handshake. And so I've been, working really closely with that team and really digging into the docs around handshake and kind of thinking about how handshake will change the crypto landscape. So that's kind of been most of my August. It's been nice. I've been able to really focus on one or two specific projects and go pretty deep.
You mentioned something, you're incubating Namebase. How does that work? So INBlockchain, one of the funds you're working with, is it your fund that's incubating that?
So my fund, under the INBlockchain umbrella it's called the Early Fund. We're going to have some pretty exciting news about that next time we talk, but, I can't say anything yet. But yeah, so it's our fund. We met this team way before they had kind of anything, but we're really blown away by the three founders. They ship at a ridiculous speed. So they're going to be joining Proof of Work as of next week. But they're really fast. They have a really great background in startups. And so they kind of know how to ship stuff that people actually want. And they're also like me, just obnoxiously excited about Handshake. And so they've got a lot of really cool stuff that they're building.
I found your Twitter feed to be a better sort of source of news on Handshake than the Handshake Twitter feed.
Yeah, well, so the Handshake, so I can give some background on it. The Handshake guys are being quiet until mainnet launch, basically, because they just want to focus on getting the testnet code up to speed. And, so I think they're going to be a lot more active, in a couple weeks. But for now, it's mostly just me being oh my God, this is so cool. Cause to me, what's exciting about Handshake is that, pre this, we're mostly in the IP address age, where you have to memorize these complicated crypto addresses and you have all sorts of issues that come up because of that, where ICOs have gotten hacked and people have switched their addresses. And since they're not human readable, it's pretty hard to tell whether an address got switched or not. And so now with Handshake, when you have this thing that you can use for crypto addressing, so if you registered Clay Collins on Handshake, then after a few fairly simple things get implemented, I'll be able to send you Bitcoin to Clay Collins. I'll be able to send you ETH to Clay Collins. And so we think that's really neat because it's you've now gone from this really complicated, intended for machines addressing system to a truly human readable system.
It's great to see these kind of human readable namespaces emerge. It takes a lot more work than I think most folks would realize, but it's an exciting development. So you mentioned incubation. What does incubation entail in blockchain? Is it kind of a virtual incubation? Teams can work from wherever they want to. Is it more a sort of a general setup and state of mind than a Y Combinator situation where there's a fixed start and stop date and you go to a place and there's a specific set of advisors? How does that work?
For us, it's definitely not. There's nothing formal. It's basically just there's a few teams where we'll be really excited about what they're building and they'll be really, really early. And for us, that's kind of a sweet spot because there's a lot we can do at that stage. We can provide a lot of product guidance. We can make all the necessary intros. We can make fundraising really easy. And so that's kind of how it works. And yeah, so actually the Namebase team did work out of our office in the very beginning. They were sleeping at our office for the first.
In Boston?
Yeah. One of the co-founders, Tieshan, is an MIT dropout and the CTO, Anthony, is an MIT grad. So they were both in Boston. And then they actually poached Tiesham's little sister from Squarespace, where she was like one of the, rising star designers. And so she was in New York, but she came down to Boston. And so it was really fun. We had like the whole team in the office, they were sleeping here. We would see them all the time.
I bet your cat's like that.
Yeah, it was fun. They got the cats, got the startup team, me and my associates. So it was good. It was really fun, very lively. But now, so they're in San Francisco. They're actually going to come back to Boston in a week, for a kind of sprint where they're going to be working out of our office. But that's like essentially our model for incubation is like, it's really hands off. We think the best teams don't really want the like super hands-on incubator approach. In my opinion, like just almost from a psychology perspective, like the best founders are like pretty intensely independent. And so we provide a lot, but at the same time, we also just kind of let them do their thing.
I think that's a pretty solid approach. I think a lot of these incubators can just fill up your time with advisor meetings and preparing for pitches and all the formal whatnot. And I think that handholding is helpful if you're very new, but if you just kind of know what you want to build, you just want folks to empower you and then get out of the way.
Totally. Yeah. The other kind of incubator in the space that I think might be interesting is actually Binance is doing an incubation program now in San Francisco. And this will be like the first class of that. But, I think that could end up being really cool because like by virtue of where they are in the industry, they know all the pitfalls. And I think I help them like look at their incubation program, and they're also being very cognizant of like not taking too much of founder time and really optimizing for being like super helpful and super useful. So I think that could be cool as well.
There's something I've seen kind of frequently out of incubation scenarios and also like venture studios where the setup is that there's a really famous, sort of figurehead that becomes chairman of the board. They have an idea that they want created and they find a really solid non-entrepreneurial operator to just kind of bring their idea to life. And I think those situations lack, sort of the founding DNA and a lot of the oomph to get it across the finish line, and they can be a little bit sterile. So
yeah, no, I totally agree.
Have you seen that happen before? I don't want to name names, but I've seen that and they just never seem to take off.
Yeah, and they don't. And also like the other big problem that people don't talk about is that a lot of those incubation programs want a ridiculous amount of equity. I mean, they're taking this huge chunk of the company. And I guess some of the operators that they bring on board are okay with that. But a really high quality, talented entrepreneur is going to tell you exactly where you can shove that. And so we optimize for really great founders much more than we optimize for having a huge equity stake. And, we're getting in really early. So like we get a significant stake, but it's not such that like the entrepreneur is left with too little and it doesn't make, future fundraising difficult. I think that's pretty important.
I think it's all about nailing the incentives. On this conversational thread that we're on, and the only reason I'm indulging in this is because the feedback on the first episode that we did together was that people enjoyed this. So
yeah, I was telling people like I don't do a lot of podcasts just because I don't have time for it, and a lot of the ones that I've done in the past have been kind of boring. But I always really like getting a chance to chat with you. It's really fun.
I appreciate that.
Yeah, I look forward to it.
Me too, dude. You're so damn thoughtful. Like, I don't know. I've said this to you on multiple occasions, so I won't beat a dead horse here. But I just appreciate the thought that you give to these ideas. Kind of another thread on teams, which I'd love to hear your perspective on. So I see a lot of teams in the crypto space that I think on the surface look really impressive. It'll be like Stanford Computer Science, X Coinbase, Google, and then like you'll have a bunch of people that are sort of variations on that, like Yale, X, I don't know, some other hot company, Airbnb. But when you dig a little bit deeper, you'll find out that like the Coinbase thing was an internship. The Google thing was like 9 months. And it's just like these people have never shipped production code before in any serious way. And then you find out that like 3 years later they ship something and they're just trying to figure out how to create production software and run a business for the first time. Is that a pitfall that people are falling into? How do you like vet teams beyond those sort of initial signals?
Yeah, I mean, I think so. Okay, like I would say that's one of the most valuable skills that an investor can have is just like this sixth sense where you meet a team and you're like, okay, these are people that ship code and they ship code for stuff that people want. And I think, I mean, I could be like, I'm pretty cynical about this, honestly. I think a lot of the teams and a lot of the investors backing those teams, they're also not confident in their ability to ship something really, really amazing. It's just that they're like, well, this team looks really good. And so there's going to be someone else that wants to invest in this later just on the basis of the team. And it's just this musical chairs game that I find really, frankly repulsive. And it's disappointing. And yeah, like you'll see a lot of these teams that on paper look really fantastic, but they have, no experience in the crypto space. And so they make all the same mistakes that these people that have been around since, 2013 or, 2010, made 5 years ago. And they're making products that don't really make sense from a crypto perspective. I think what works as a distributed network is very different than what works as a startup. And so we'll see all these pitches that just to us seem ridiculous, decentralized Airbnb. Well, it's like, well, Airbnb is actually pretty great as a centralized company. And there's a lot of awesome things that come from that centralization. And, I think, it's disappointing to us when we see those teams. And I think we've gotten really good at differentiating between, the real shippers and the people that just look good on paper.
Indeed. Personal update for me. I'm here in the middle of the country contemplating moving to San Francisco. Who knows? But the weather's been gorgeous. It's like 72 degrees outside. I have twin toddlers and we're about to enroll them in music classes. Every year I try and go on a solo camping trip. So I'll just go up to the North Shore of Lake Superior and get a campsite right on the water and spend a couple days just completely isolated by myself. I'm really pissed that the place that I go to every year now has cell phone access. So I've got to find a way to lock that up. I found this thing called a kitchen safe. It's a timer safe. It doesn't require a combination, but you just put something in it and then you set it for a certain amount of time and it locks you out of it. Now it's pretty fragile. So you could get a hammer and probably beat the shit out of it and get to your, phone in an emergency situation. But I've really been relying on that. It's made for people who are on diets. So you could put your cookies in there or your cigarettes. But, it's fun. I think on top of that, we're about to announce some really cool partnerships at my company, but it's similar to some of your tweets, Eric. I just can't talk about some of this stuff or I'll get in legal trouble and the deal will fall through.
We're doing the Tron thing now, the announcement of an announcement.
It's so meta. People totally fall for that though. Or the announcement that we're contemplating doing something.
Are you taking Nomics private at 420?
Funding secured. So as an overview of what this is, for those who have stuck around thus far, I wanted the Flipping Podcast to have a monthly update. And I explored a number of options. I contemplated working with some other newsletters that provide a survey of thought pieces on the space, a lot of Medium articles, a lot of podcasts that are in and of themselves summaries of what's been happening in the space. And it seemed kind of like I'd be too far away from the primary source events and primary source content in the space if I did a roundup that was basically a roundup of summaries. And I really am a huge fan of Eric's Proof of Work newsletter. It's hands down my favorite newsletter. And so I approached Eric about doing a monthly wrap up with Proof of Work as the basis. With that established, I can tell you a little bit about, as an audience, what you can expect. We're going to try this once. We're going to see if you like it. We're going to see if Eric can stand spending this much time speaking to me. And if all goes well, we'll see if we can't turn this into a monthly thing. Can you tell us a little bit about Proof of Work, the philosophy behind it, and what folks can expect to get if they subscribe to the newsletter?
Proof of Work is a super simple newsletter. Basically we get updates from all of the best teams in the space, every week, and everyone will send us these 2 to 3 line updates of what they shipped that week. And, they're really good about, they're not shilling their projects. They're not talking about a bunch of boring stuff. They're just talking about this is what we made this week. And then when you put that all together, you get this really cool thing that's almost someone described it as a weekly stand-up meeting for the crypto space, which I like a lot. And so you can just at a glance see what everyone's working on. And then, I tend to write a little bit in the beginning about kind of what's going on that week or what's interesting in the space. And it's been really fun. It's, the genesis of this was just I used to contact all these projects privately and just chat with hey, what are you guys up to? What's getting built in order to stay on top of the space. And then I realized that, everyone wants that. And so it's been really great. I think we're going to continue to sort of scale it up. we have to be really, picky about who we do let on proof of work, because right now the quality of the projects are so high, and I really want to keep it that way. And so we're fairly careful on what projects we let on. But, it's going to keep growing. There's definitely every year there's a bunch of new interesting projects. And so I think it's a good format that we can just stick to.
Proof of work kind of conforms to, what I see in you in terms of your philosophy for consuming content in the space, which is your love of crypto projects and makers in general. Like, we hung out a little bit at Consensus. You seem to have hated Consensus, but I can see you really liking an event like Scaling Bitcoin, right? Where it's maker focused, it's developer focused, it's, very close to the actual source code.
Yeah, Scaling is one of my favorite conferences of the year. I really like it. Scaling Bitcoin's great. There's a couple other, there's a security focused conference, but, I think really in general, the non-technical conferences, at least that I've gone to, have ended up being pretty big waste of time, just because you get so much noise for the tiny bit of signal.
It's like the calibrating for the right hoodie to suit ratio. Hopefully it's at least 8-to-1 or something.
Right.
Okay, let's start with chapter 1, which is a review of major themes and trends among cryptocurrency projects and teams during the month of August 2018. Eric, how would you describe what you saw happen with regards to projects submitting updates to proof of work in August? What were the major themes?
The space is so diverse that it's hard to say one major theme. But I think there's, because of this down market where people's attention has gone away from crypto trading and flipping ICOs and stuff to actually building. I think August has been a great month for a lot of projects. And, for me, the two big things sort of have been the mining landscape is getting really interesting. And then also Handshake is on the scene and is building a whole bunch of stuff. And then, the other thing that I think is kind of quiet, but is really exciting is, Zcash has been working on the sapling update for a long time. And, for those people who haven't been following along with that, what sapling does is it makes these ZK snark proofs a lot more lightweight. And so potentially, a cell phone will be able to send Z transactions. And so I think, that's been something that they've really been just cranking on for ages. And in August, they now have it ready to activate. So I think that's been super exciting for us.
That's really exciting. I have to admit, so I don't know a ton about Zcash. At a high level, I do. At first, I wrote it off because it seemed like almost nobody was using it to send private transactions. It seemed like the ratio of non-private to private transactions was a liability. I thought some of their partnerships were impressive, and sort of Wall Street involvement was impressive, but I really don't know that can drive a project forward. But then a lot of people who I really trust and respect started speaking very highly of Zcash. Folks like you, Nick Carter's a huge fan. There's a family office that I know of that has been involved from the very beginning. And it seems like there's probably more there than meets the eyes. Initially, what do you see in Zcash?
For me, it's really simple. Zcash has one of the strongest cryptography teams in the space. And so if someone's going to make a really usable privacy coin, I think they've got a really good shot at it. I mean, luckily there are a couple other really great teams out there working on the same problem. And so I think, we're going to see a lot of cool stuff in the privacy space. And I think, among investors, privacy is one of the most crowded trades where everyone realizes that, these privacy coins, at least one or two of them are going to do super well from a price perspective and from an adoption perspective. Just because privacy is such a need. And so we think of it there are definitely some use cases where the public nature of the Bitcoin ledger is a huge asset. If you're doing settlement between banks, or if you're doing something where this auditable by anyone, aspect of the blockchain is great, then that's awesome. But there's a lot of stuff that's not the case for. I mean, there's, any kind of purchases. You really don't want there to be a permanent public ledger that anyone can go, suck the data out of. And so I think the fact that privacy is a need is pretty obvious to everyone. And then it just comes down to okay, which team do you believe can actually ship this? And for us, it's the Zcash team is fantastic. Grin is really interesting. The mobile coin guys are working on something I think that's really cool. So yeah, that's kind of where we're looking at it. And Zcash, in my opinion, has been, I don't know if it's bad at or just doesn't care about promotion. And so like a lot of the cool stuff that they ship doesn't really get as much attention as some coins that I think are actually way inferior to them on a tech basis. But I think kind of now is we're approaching the moment of truth for this, where, you know, once Sapling is activated and you can send Z transactions really easily from a phone, if we don't start seeing the Z to T ratio going up a lot, then we know we've got a problem.
When I think about some of these features that turn into coins, like, you know, sort of we've got a privacy coin and, you know, we've got a high transaction throughput coin, and it seems like there's these competing forces of interoperability, on-chain interoperability and atomic swaps versus sort of whatever the big coin is, just looking at the source code. I know it's not this easy, but, you know, adopting some of the same cryptography and features. I wonder which is going to win out. Like, on one hand, Bitcoin probably isn't that far away from confidential transactions if they can actually get consensus on creating a fork that makes that happen. But on the other hand, if you have a team that's been just focused on one thing and atomic swaps are super easy to do, then why not just swap out for the coin you want to use in a fairly seamless manner on a multi-coin wallet and use that? I don't know which one's going to win out. What's your perspective on those competing forces, or do you think they are competing?
So I think privacy is one of the features that it's not very easy for something to just adopt. I think there's always going to be some trade-offs. Like you said, like there's definitely uncertainty around whether there will be consensus that Bitcoin should ship a whole bunch of privacy features. And so I feel like privacy is appealing from that perspective, and that like we definitely will get pitches where I'm like, you know, this is not a feature. This is not like a new coin. This is just a feature that Bitcoin is going to adopt eventually. But I think privacy is probably one where there's room for something that's like focused on that. And you know, which coin that ends up being is an interesting question. And then also like the situation you described with easy swappability is pretty interesting, because if someone just like constantly holds Bitcoin forever and then like occasionally swaps into a privacy coin when they need it, that's not a good news for the value of the privacy coin. And so I think the actual like the monetary policy of these privacy coins is fairly important, where, you know, you want something that's similar to Bitcoin, that's, you know, not going to be very inflationary, that isn't controlled by any central parties. So there's not, you know, some giant pre-mine just sitting out there. And I think Zcash has done pretty well with that. Like Zcash does have the founders reward, but the founders, you know, regularly sell some Zcash. So it's not too centralizing there. And, you know, the majority of the Zcash is still in the miners' hands, and the miners sell very regularly. So I think from like a monetary policy perspective, Zcash is looking interesting as an asset that you could actually hold. And, you know, the same thing is true of Monero. And then Grin is an interesting case, because Grin is talking about, you know, having a permanent inflation where like I think the current number is like 2% every year. And so I don't know if they'll stick with that. There's a lot of controversy over whether that's a good idea, but that might affect sort of whether you really want to like hold a lot of Grin long term.
Okay, instead of diving into all of that, which might be a fun topic for another episode, let's wrap up Chapter 1 and kick off Chapter 2, which is a review of our favorite updates submitted by crypto teams to Proof of Work during August. I'll kick this off by mentioning some updates submitted by the Dharma protocol. I'm really a huge fan of Dharma in general. I think it's a huge market. I think it's an ambitious project that Dharma is building. You know, I love that they haven't issued a token yet. I think that's really smart on the team's part. So here's how I think about Dharma, which is a platform for creating debt markets. So the U.S. money supply, the M2 money supply, is at about $17 trillion. So M1 is like, you know, cash, coins, checking accounts. M2 includes like money market accounts and relatively accessible stores of money. It's at about 17 trillion. The stock market is at $30 trillion. But the bond market is at $40 trillion. And the bond market doesn't even include household and other forms of debt. So debt is a really, really, really big deal. And I think it is essential and necessary that the crypto space started out with a store of value like Bitcoin and created smart contracts. But I really think that debt is a monster use case. And everyone quotes David Graeber's Debt the First 5,000 Years and talks about his assertion that debt actually came before money. I think that's really an interesting point to make, and I think it's unwise to ignore the impact of debt markets on the space. So I'm a huge fan of what Dharma is doing. They released a relayer kit, which allows, I don't want to say anyone, but developers to create relayers on top of the Dharma protocol. And so I think anyone who's followed the 0x project can find an analogy there. So a relayer for Dharma works very similar to like a decentralized exchange on top of 0x, right? So you've got a maker and taker, or a buyer and seller, a bid and ask in a traditional exchange. On Dharma, you have a lender and a borrower, right? And then there's an interest amount, and there's a transaction fee. I just think there's so much, that can happen here given the size of global debt markets, which are larger than global stock markets and larger than global money supplies. So I'm really excited about how easy they've made it to launch a relayer on top of Dharma. And I'm excited about some of the relayers that are on mainnet. So we'll see what happens there. That's my first favorite update.
So it's funny, like, I have a really, intense bias just towards sort of really early stuff and go to market. And so you're talking about like the size of M2 and whether debt came before money. And like, all I can think about when I look at stuff like this is like, okay, who's going to be the first person to use this? Are there users that want this thing? What are like the really simple, tiny little like toy use cases? And I think Dharma is definitely one of those projects where like people definitely want this. Like there's the really simple thing is like people want to be able to borrow assets that they want to short. And so like one of the biggest complaints, that crypto fund people make is like, all the coins that you actually want to short are what's known as difficult to borrow assets, where like there's not that many people that are lending them out. There's not that much liquidity. And so if you have something like Dharma, and like what's cool about these decentralized exchanges, besides the fact that they eliminate counterparty risk, is that they make it really easy to aggregate liquidity because they're all sitting on top of the same, permissionless platform. And so I think, yeah, like if Dharma just kind of keeps doing what they're doing, they're going to be sitting on something very useful.
I agree. I forgot what it's called, but it's like really short-term debt, like almost like payday loan debt, but non-scammy. So I can envision a scenario where an employer pays an employee through a smart contract, but that smart contract is also, locked up with Dharma. And so you can take a loan against future earnings in a fairly kind of short-term way. And I can see how this would be helpful for like shift workers or other people. It's fairly low risk for the lender and fairly low interest rate for the borrower. So yeah, I struggle a little bit with what sort of the short-term immediate use cases are other than people borrowing money for speculation. But I think there's just so much demand to borrow money that I can't help but think that this is going to catch on in the long term. It might take a few years though.
Yeah. And Dharma definitely is one of the projects on proof of work that they update every week. Every week they have something, interesting and new that they've built. So they're shipping.
We recently had Nadav on the podcast, and I think he's one of the most brilliant people in the space. I think he's a really sharp guy, and I think they're going to keep on shipping at a really amazing clip. Eric, what's your first favorite update of the month?
So I think my favorite, and it wasn't a formal proof of work update. They're actually going to be starting next week on that, but I would have to say Handshake's launch was kind of the most exciting thing to me that happened. And so what I like about that project is that they launched directly to a functional testnet. And within like a week, there were people building on that testnet. And, there's a Chrome extension out now, so that if you install this Chrome extension, you can actually resolve, Handshake domains. And so like you can just in Chrome, like you can type in a Handshake domain and it'll show you a website. So super excited about that. I will say that the funny backstory is that our fund invested in Handshake, last year. And when we invested, they're like, we're ready to launch testnet in a couple weeks, and this thing's going to be live. And I was like, cool, that's awesome. And then, like a month later, I was like, oh yeah, let's go check in on Handshake. What's going on there? And they were like, we're really close, like basically one more week. So I'm like, all right, cool. And then like this went on for weeks, and I was like super annoying to the Handshake team, just like, guys, what's going on? Like, I'm not in that big of a rush, but like I kind of want to know what's taking so long. And at one point, one of the chief devs at Handshake was like, dude, I don't really know like when we're going to launch. But I found some people that might. And he sent me a link on Yelp to like fortune tellers in the San Francisco area. I was like, all right, like cool. But then they ended up, they were quiet for like a week, and then suddenly it launched. And so now that that's out there, I think, that's been the most exciting thing to me recently, is just It's one of the few protocols out there that I've seen where like there's just massive dev interest from day one. And there's interest from like, I have a lot of friends in the tech space who to this day are like really skeptical of cryptocurrencies. So like some of them are like even Bitcoin they don't like. Some of them are just like, we get Bitcoin, but everything else is a scam. And a lot of those people, I sent them the handshake docs and they were like, oh, this is like really cool. And there's all this cool stuff we can build on it. So I think that's really exciting.
I think one of the limitations or one of the bottlenecks to mainstream adoption is the ability for these cryptocurrencies, which are native to the internet, to extend themselves into the worlds that we live in every day. And I think these kinds of like sort of internet native technologies that build on, sort of these foundational technologies that sort of started with the advent of Bitcoin. I think it's important. I think it's, sort of the development needs to be proximal to what already exists and have value. And I think that's what's been lacking. I think it's important to remember that, when the internet started, we had TCP/IP, and then there were things built on that, and then it took us a while to even get to like JavaScript. Like JavaScript is several layers up from TCP/IP, and even then, it took a long time for us to get to things that we can interact with day in and day out, like Uber or Airbnb or our bank accounts, or sort of the Internet of Things took a long time to get here, and so I think the crypto of things is also going to take a while. And so I love that this is sort of taking the space on its own terms and not trying to reach too far into use cases that are analogous to, Web 2.0.
Totally. Cause I mean, like, we're so far from that. And I think like the reason that I'm so excited about Handshake is that it's a reasonable step forward. And so like we get all these pitches all the time from like people making these really complicated dApps that are going to be, used in all these, like, ways that are analogous to the ways that people are using apps today. And I'm like, the space is just not there yet. Like, there's all this infrastructure that just doesn't exist yet. And so it's like, Handshake is, again, taking us from like the IP days to like the days where like, hey, there's this thing called URLs, and like you can go to a URL and it'll resolve something. And this is something people have been trying to do for a long time. So like the first altcoin, as far as I know, was Namecoin. And Namecoin had a very similar mission to what Handshake is doing, but there were some pretty fundamental problems with how they approached it. And then, there's been a whole bunch of attempts since then to do this sort of like human readable addressing in crypto. And so, this is like, it's a problem that everyone's known about for ages. And it seems like these guys have a really solid solution to it. And so I think we're going to see a lot of neat stuff, besides tech people that I showed this to, I showed it to a bunch of my like kind of internet culture friends that like, there's people I've known that have been writing interesting blogs for 10 years or have been doing like internet art. And a lot of them were really excited too, because they're like, you can make all these weird things. Like you can have an emoji domain on Handshake. So like you could just be like, Eric.fire emoji or whatever. There's a lot of like fun and interesting stuff that I think is going to come out of this. So I'm excited to have them on proof of work, and I'm stoked that it exists.
It's very cool. So let's transition to our second picks. Mine is a combination of Agoric and Zeppelin, and I think they're trying to solve similar problems, which is that smart contracts and the scripting languages around smart contracts are really a pain in the ass. I think money lost due to hacks around smart contracts is approaching or may have even surpassed the dollar amount lost to people hacking exchanges. It's probably getting close there. I don't have hard figures in front of me, but it's a real problem. I mean, we've got situations like the DAO hack or the parity hack where the code was out in public, like it was open source, everyone could read it, and still there were exploits that were found. And it's a real problem. I think if the space is going to develop, I think we need stronger types. I think we need hardened code. We need trusted auditors. And so I love what Agoric and Zeppelin are doing on those fronts. Agoric is a JavaScript-based smart contract platform. And I think that's a smart move. Like when I look at the tech stacks that are emerging, I really see JavaScript eating the world. We started out with JavaScript as a front-end language. I'm seeing more and more APIs and a lot of the API work being done with JavaScript. JavaScript is becoming more and more pervasive on the back end. through Node. And I think it's really the right way to go for smart contracts because there's a lot of people that can look at JavaScript code and very quickly start to understand, what's happening there. So I like what Agoric is doing. Zeppelin as well, they seem to be taking a bit of a different approach. It's more about providing a battle-tested library of smart contracts that have been used in various situations and that can be modified. And I think that's a smart way to go as well, especially since their library is for Solidity, which is the most popular smart contracting language. So I like what both of those teams are doing, and I think it's similar to, Handshake in a way where it's providing value that's immediately usable to folks that are natively operating in the space, and it's just another piece of scaffolding that I believe we need to get to where we want to go. What's your take?
So I love both of those projects. I've known the Zeppelin guys for a long time. Demi's a good friend, and Manu also was like a special partner at our fund for a while. And yeah, they're just like, they got into the game via auditing. They're part of this really interesting scene in Argentina. So in Buenos Aires, there was this house called House Voltaire, and they all like lived there. And the Decentraland guys and a couple of other interesting projects. And they kind of just like created this community out of nothing and became one of the premier auditors in the space. And then in the course of auditing, they ended up just making a bunch of their own kind of standard smart contracts where they would just say like, look, like instead of, reinventing the wheel for the 50th time, you can just use this contract that we've already made. And then this idea of turning that into like a stake-based, almost operating system is a really cool one. So I love those guys. And then the Agoric guys I met actually through Zuko. And so Zuko like does almost no investment in the space because he's like, I don't have time for it. And, I need to focus on Zcash. But when he ran into the Agoric team, he was like, dude, this is like so awesome. And he explained, so like one of the really cool things about how Agoric's thing works is that they use this thing called an object capability model. And it's a different way of thinking about sort of how you permission various objects in a space. And it's fairly complicated. It's like people that are interested in like security models definitely go look up object capability model and kind of understand how that works. But I think it's a pretty intuitive way of, writing very secure smart contracts. And so Zuko was like, dude, you got to talk to these guys. And then I met some of their team at ZCon at the first, Zcash conference and was really into what they were building. And then, yeah, they've like, ever since they've been on proof of work, they've just been constantly shipping cool stuff. So definitely like an awesome project.
The team definitely seem like they're, a bunch of veterans, like folks that, can hang with Zuko and or, teach them a thing or two when it comes to cryptography.
Totally. Well, because I think what a lot of people don't realize is like there's a lot of new blood to the space, but there's also a lot of people like Zuko and like the Agoric people and like, like this dude Ian Grigg on EOS, and like there's a couple people out there that have just been around forever, and they've just been super interested in this idea of, permissionless digital money, since way back in the day. And so it's cool to see these people, actively working on this now that it's become a really hot thing and that, the technology has evolved to such a place where it's actually possible to make it work.
Indeed. And I think, cryptography's been around for a long time, especially, public private key cryptography. I recently bought a domain from someone. There was this domain name we really wanted for business purposes. And on the homepage, it was like, yeah, it costs 1 Bitcoin. And I was like, well, that's really interesting. So I contacted the guy, and turns out he's never owned Bitcoin before, but he wanted to, but he's an old school developer. And he's like, wait, hold on, I need to figure out how to create a paper wallet. And then he just goes away, he reads the Bitcoin white paper, and he just like generates his own key. And he was like, yeah, I get this. There's nothing new here. I get it. He like, here it is. There's a block explorer. I generated a key. It's cool.
Yeah. It's always awesome to see people get into Bitcoin for the first time. And I think like, selling a thing that you made or selling a domain or something for your first Bitcoin is definitely like an awesome way to get your hands on one.
For sure. So what's pick number 2?
So I guess like people are going to get so sick of me for this handshake stuff, but I would have to say like my pick number 2 for this is Namebase. And so Namebase is the first exchange on Handshake. And they are also people that ship at a ridiculous speed. And so the next proof of work is going to feature their first like formal update. But informally, I've been talking about them a little bit in the preludes. And, so what they're building is very simply just like a GUI interface and a custodial wallet for people to buy and sell domains on Handshake. And they've got about 1 million ideas for different ways to make Handshake more user-friendly and more interesting for people. I think the coolest thing that they're talking about building is if you think about it on Handshake, and this takes people a while to wrap their heads around, but any name on Handshake is actually a top level domain equivalent to like .com or .org. What that means is like if you register Clay Collins, you can just use Clay Collins as your domain. There's no like x.y format. It's just Clay Collins. But if you registered Collins, you could then have a subdomain, clay.collins. And then you could also sell .collins subdomains to anyone in the world that's, named Collins and wants one. And so, like joe.collins and bob.collins can come buy those domains from you. And so what's interesting about that is like, it's not natively supported on the blockchain. And so on the blockchain, it's only the top level domain that's being registered to the Handshake blockchain. And then the subdomains, currently would be maintained the same way that a subdomain on .com is maintained, which is just, there's some name servers and you have records for all of those subdomains. And so in the white paper, there's actually discussion about could you create, for example, a Plasma child chain that records subdomains. And so one of the interesting things that Namebase can do early on is it can allow people who have these interesting top level domains to then sell and maintain subdomains on them. And I think in the beginning, that'll probably be a centralized kind of thing where it's just Namebase is like helping you do that. But I think in the long term, there's going to be a lot of really cool stuff around probably like plasma chains, for these subdomains. And why that's important is, and this is getting kind of deep into the technical weeds, but I know the listenership here is quite technical. Is that on Handshake, there's kind of two security models. So like there's actually maybe three. So like the highest security is like you can run a Handshake full node and you can resolve domains, through that full node. And, in that case, you're getting the correct domain. A little bit weaker security model is you can run a light node that does these SPV lookups to the chain. And then the third security mode is just sort of similar to like normal DNS where you're porting at a name server and you're hoping that name server is itself a full node. And so for subdomains, you only have that third option because they're not on the blockchain at all. But at the point where there are some sort of like child chains or side chains, whatever they want to do to record these subdomains, then, the things that Namebase is currently managing can actually go on chain and they can be resolved at the same level of security as these Handshake top level domains. So I would have to say like the Namebase guy is definitely one of my favorite teams in the space, shipping super, super fast. They're about to be done fundraising. They're actually pretty funny. Like these guys were like, bitching to me nonstop that fundraising is so distracting and it's like slowing them down so much. And I was like, you guys are still shipping like about as fast as any other team in the space. And you claim that you're being slowed down by fundraising. So like, I'm kind of scared to see what it's going to be like once they're no longer distracted by that. But, they're going to be doing proof of work updates. So everyone can follow along with that as of next week.
Smart investment. I mean, the freaking digital land grab that is going to come from this. Like if people thought CryptoKitties were the ultimate, collectible, like they have no idea what's coming. And then just sort of the bartering, the exchange, like this shit, if it actually takes hold and you have the ability to, like individuals have the ability to publish their own domains under which other domains can be published, this is just going to go nuts.
That's exactly how we feel. I mean, like, so it's interesting that you mentioned CryptoKitties because, and the Handshake people have never said this, but this is how I feel is that like these Handshake domains are actually the first non-fungible digital asset that has a real value use case because like CryptoKitties are cool. And there's a lot of like, I think eventually there will be, valuable non-fungible assets. I think they're probably going to come from gaming first. I kind of don't buy the like digital collectible story outside of a gaming context. We'll see. Maybe I'm wrong. But I think with Namebase and with Handshake, like the value of having these names is so obvious. And what's really cool about names is like they're naturally scarce. And so like even Bitcoin, like Bitcoin's scarcity is artificial. And so like we create Bitcoin scarcity because we all agree that there's only 21 million Bitcoins. And I would say like I think it's underappreciated how much harder that is in Bitcoin than anywhere else. Cause like Bitcoin has this like intensely ideological culture around like we are never modifying that. And like the number of like curmudgeons that don't care about money at all that you would have to like go through in order to change that is pretty high. But I think, with names, there is this interesting aspect where like the space of names is finite and the space of names that anyone actually wants is even more finite. And so you have this like natural scarcity around them. And yeah, like at the point where you have a marketplace where you can buy and sell them and you can sell subdomains on them, like I think it's going to be extremely valuable.
If you can get a significant cut of that entire ecosystem or the entire ecosystem's exchange volume, that's just huge. Like, yeah, so I was saying to a friend the other day that Handshake and sort of these domains this is the crypto collectible we need, not the one we deserve. It's going to be awesome.
There's, I guess, two funny anecdotes. Like, one is that the team that's actually building Namebase did not really realize how valuable it might be. They just thought it was really cool. And so, we like INBlockchain used to run INB, which was one of the biggest Chinese crypto exchanges. So we're very familiar with like how lucrative exchanges are. And so they were like, yeah, like this is so exciting. And then like, maybe we'll be able to make a little bit of money on this too. Yeah, like I think it's going to be pretty valuable. Like, I don't think you guys really get maybe just how valuable it's going to be. But now they've kind of, wised up to that. And then I think the other interesting thing is when I told crypto friends about this, and about Handshake, they were all like, okay, well, so I have to get my name. Like, I'll pay like anything. Like, I just, if like I have a buddy, his name is Jimmy, and he was just like, Jimmy on Handshake is going to be mine. And like, whatever I have to pay, that's my name. So I think there's a lot of demand for these, just like vanity handles. The other thing that I think is exciting is like, I grew up on the internet. I think I had an AOL account when I was like 8. And I really enjoyed, like, back then there were all these like really kind of ad hoc, really janky communities. Like there were like web rings, and there were like, groups of blogs that would like quote each other. And there were all these kind of almost like little tribes on the internet. And I kind of see with Handshake that might come back. Like I think people are going to have all sorts of interesting content on Handshake. And like there's something that I think I thought about last night, which is like, it's actually possible to know every single website on the Handshake internet if you monitor the block explorer. So you can see when a new domain is registered, and then you could crawl, and this is a free idea for anyone who wants to build this. I think it'll be cool. You could monitor the block explorer. You can see anytime an auction concludes. And so a new domain has been registered. And then you just have something that like crawls all those domains every day, and you see if there's anything actually up there. And if there is, then you can make a site like StumbleUpon. I don't know if you guys remember that, but like StumbleUpon was this extremely addictive, extremely time wasting, really cool website where like you would just click and it would give you a new random website from the internet. I think there was some like social filtering, so they tried to make sure that the websites were interesting. But you could totally make that for Handshake, and you could just kind of like explore the early days of the Handshake internet. So I think it's going to be really neat.
That you could create the Yahoo directory for Handshake just manually for a few years here.
Yeah, because it's going to be really small in the beginning, right? In the beginning, it's just going to be a bunch of nerds and like weird internet people like us that have content up there. And I really I'm obsessed with the early days of communities like that. I think there's one of my favorite sci-fi authors, this guy William Gibson,
the king.
Yeah. I didn't know you were a fan, but yeah, he's amazing. But yeah, one thing he's like really bummed out about is that sort of in this like late capitalist environment that we live in, if you have like an interesting kind of insular subculture, within like months, it's been commodified and it's a new trend, and like Kylie Jenner is wearing it and it's over. And so I think like the early days of Handshake are going to be really fun because it's this kind of like quiet, unknown, weird corner of the internet where people can experiment. So I'm super excited to see how that develops.
Me too. Speaking of sci-fi, have you read Snow Crash, Cryptonomicon? Do you like Neil Stephenson?
Yeah, I'm a big fan of both of those. Actually, I tweeted out like a sort of crypto canon for people that are interested in sci-fi, and I think Stephenson and Gibson are way up there. I think the other one that people don't talk about as much is Bruce Sterling.
Oh, I don't know.
Bruce Sterling's great. He actually co-wrote a book with Gibson called The Difference Engine. That's like this Victorian era steampunk book about Charles Babbage and the first computer. So that's a great one. But he's done a bunch of other like interesting kind of cyberpunk short stories. It's also really great.
Transitioning to pick number 3. I'm going to go with Compound. To be frank, I don't think that their updates in proof of work are that interesting. It's all early stage stuff. Like we fixed this bug and, we created a validation engine and, we published this documentation or, updated our white paper, just, stuff like that. But I think the problem that they're solving is really interesting. And I think the team is also pretty interesting as well. So they're essentially creating an open source money market for Ethereum. And I think it's a super valuable use case. I think one of the biggest needs in the space is the opportunity to earn interest on our crypto wealth or just our crypto, whether or not it's wealth. And I think a money market is a really efficient way to do that. I like that you don't have to, maintain an order book or constantly be actively in accumulation mode. This is more of a passive way to earn dividends on your crypto. So I'm really excited about it. I hope they pull it off, but we'll see. What's your take on Compound?
Yeah, Compound's super cool. I actually didn't get in their round. I wanted to invest, but I committed way too late. And then they were like, sorry, we're full. And I was like, ah. But I know the guys really well. They're really cool. They're working super hard. And I think you're right. They're like, what they've made is pretty much an obvious thing that people need. And they, I think, can execute on it.
Yeah, for sure. Like a trustless.
I think one really interesting thing that I haven't heard a lot of people talk about that I think I'm going to have someone at our firm write about is like, you know, in the near future, if you hold crypto, there's going to be a lot of ways you can earn some interest on it. I mean, so if you have either, you could lock it up in Maker or CDPs. You could lend it out on centralized exchanges for margin lending. You could put it in Compound. You know, if it's proof of stake, you could stake it. And I think it'll be really interesting to see like how these various things compete, because like, you know, they all have different levels of risk. And then they all have different levels of reward. And I think like once you have a lot of crypto in the hands of like extremely rational economic allocators, they're going to put their money wherever the most value is created with the least risk. And if you have something that depends on people staking, you better hope that that's going to be like risk adjusted a good move, or they're not going to do it.
Yeah. And hopefully there'll be some sort of, I don't know, like a meta allocator that sits on top of all these different options for deploying your crypto assets and getting a return, and you can move a slider from like high risk to low risk.
Yeah, totally. No, it'll be really interesting. Like there's like some interesting in crypto, like there's some like zero risk ways to deploy where like, you know, the collateral is locked up and so you know you're getting your money back. And then there's, you know, much riskier stuff like staking in a system where you might get struck, or, you know, lending out in a way that's not collateralized. So I think it'll be really, it's going to be fascinating.
You know, every time we have an Argentina or a Greece or a Zimbabwe or where did it happen most recently? Turkey, you know, it's like money flows to crypto. So I see adoption on the rise. What's your third pick?
Well, quick interlude there. I think that hasn't even gotten close to getting started, just because in most of these countries that have a demand for crypto because they have an unstable or inflationary currency, like the on-ramps suck. And those on-ramps are only getting better. So I think like we've only barely even seen the beginning of that narrative. But anyway, so I think the other pick that I have is, the Decred guys have been working on this thing, Politeia. It's fairly simple. I mean, so like, I'll preface this with, I'm still really skeptical of like on-chain governance as a concept, but I think if anyone's going to make it work, it's going to be Decred. And they have this cool system that's like, it's an on-chain, proposal system. And so it actually stores all the data on-chain. And you can propose, you know, we should build this thing for Decred, and I want X amount of the block subsidy to get diverted to this so I can go build it. And having that on chain is important because like if it was just an off chain website or something, it's not censorship resistant. And so if Decred came under like serious attack, they could just take down the proposal system. So they've been cranking on this for a long time. Like anything in crypto, like that has like the most brutal, like adversarial model ever. It's much harder than it sounds. Like it sounds like this would be easy, right? Like you just have this big page of like proposals, but there's like a million attack vectors and a million different ways it could get censored. So they've been working on this for a long time, but they're very close to having it actually live. And so I'm super excited about that. I think it's really cool. And again, like even from a position of like some skepticism around, on-chain governance, to me, it's like one of the most exciting experiments being run in the space. So I've been paying a lot of attention to that. And I love what they've done with that.
Yeah. So I'm a somewhat early Decred holder, but it's so funny. I saw a tweet the other day where someone was describing narratives around, you know, bias or lack of skin in the game. And the tweet essentially said that if you say you don't hold someone, then people will claim that your assertions about that token are false because you don't have skin in the game. But yet if you hold a lot of it, then you're just shilling your bags. So anyway, I think Decred is doing some interesting work. I'm also skeptical, and I think that there's some sound logic in some of the rebuttals to on-chain governance from Vitalik and others, but I also think it's something that shouldn't be written off. And I think it's a worthy experiment that like the world needs. And I'm supportive of the ambition, and I think we're going to get there eventually. But I still think there's a lot of problems that, you know, remain to be solved, you know, namely participation and getting people actually, you know, interested in voting. So how do you have effective on-chain governance in a scenario where people aren't actively voting? And we saw that scenario, you know, play out with EOS and sort of the stalling of the launch there, if I understand that correctly.
I mean, I think the other thing I would say about Decred and in general is people are like, oh, this like, there's all these problems with this potentially, and like, it's maybe not going to work. And I'm like, well, good. Cause like if this was obviously great, there's like no investment opportunity. And like the same thing I feel like is true of the space where people are like, we just don't know if there's anything here. And it's like, yeah, well, I mean, good. Cause like at the point where everyone's saying Bitcoin is awesome, then like it's over. Like there's, it's like pork bellies. Like there's not.
That's priced in.
Yeah, there's not any venture upside left. And so I think for me, it's very fun and comfortable to be in these spaces where it's like, we're not really sure if it's going to work yet. And you mitigate that by, having a great team like Decred that like is honest. They're not overhyping what they're building. When I talk to them, they're like as skeptical as anyone, but they're saying, we have this thing that we think is interesting and we're going to build it out and see what happens.
I think it's easy to write Decred off when you see like their spacesuit breakdancers and their kind of NASA-esque jackets, but
supposedly I was told that I have one of those jackets in the mail. And I did tell them that I'll wear it at my next talk if they send me one. I actually also don't have any Decred at the moment. It's one of those projects that I'm excited about. And like, I was excited about it early enough that I was like, I should buy some of this, but I just never did. But I'm waiting for this bear market to continue and I'll probably pick up some Decred so I have some skin in the game and then people can accuse me of shilling my bags.
I think Chris Berninsky and Joel over at Placeholder Ventures are smart people and I think contribute a lot to thinking in this space. And the first, and I believe the only prospectus they've written up around an investment they've made, was on Decred. And so I think those guys aren't fucking around in general. And so I think there's something to pay attention to here for sure. I love their commitment to atomic swaps and the Lightning Network and, sort of as aggressively as possible pulling what they can from development work that's happening around Bitcoin. So I remain a fan and I think we can expect to see good things, happening. So that wraps up chapter 2. Let's move to chapter 3. In chapter 3, Eric, as the editor-in-chief of Proof of Work, announces the winner of August's SHIP Award. The SHIP Award is a fictitious award that comes with absolutely no prize for the crypto project that has been most prolific in August and or is otherwise deserving of the award, according to Eric, who I've decided can grant this award at his sole discretion and without further explanation. Eric, who gets the Proof of Work SHIP Award for August?
Yeah, I mean, so I'm definitely the editor-in-chief. I'm the grand poobah here. There's no other editors at all. I got no competition for that one. Yeah, I think so. I would have to give the SHIP Award to Zcash for Sapling. And it's maybe a little bit premature because it hasn't been activated yet, but it's ready to go. And that's just been something it's a really hard problem. It's like, cryptography research level difficult. And I think, assuming it does activate smoothly in October, it'll be pretty game changing for the crypto landscape. So I would have to give the SHIP Award for August to Zcash for that one.
Nice. Now to chapter 4. Chapter 4 is a conversation with Eric about topics I've wanted to discuss with him. The only basis for the topics here is that I've wanted to discuss them with Eric for a while, and I think he'll have some good perspective on the issues at hand. Okay, let's get to the first discussion topic, which is about Asian exchange dominance. Eric, why do you think Asian exchanges have been so utterly dominant recently?
I think it's complicated. I think the two main factors are the Asian exchanges were forced by adverse government forces to be pretty resilient, and they all kind of they've had a lot more pressure. And I think like you see in natural selection in organisms that like when the environment is really hostile, you get some really interesting animals evolving. All these Chinese exchanges evolved in this like extremely adverse environment where you never know what the regulators are going to do. And I think, in the US, there's this perspective that like the regulators in China hate crypto. I don't think that's really the problem. It's like the issue is just the regulation in China is much less predictable. And so it's very hard to tell like when you're on the right side and when you're not. And so these exchanges have had to deal with that from day one. And as a result, they're not tied to a fiat gateway. They're mostly crypto to crypto. And then there's also just so much competition among them that like there were hundreds and hundreds of exchanges, fighting for this market share. And so they've all like had to get really, really good at what people call in Silicon Valley, like growth hacking. And so you've seen them get really, good at that. The other thing I guess is just like China and the US are the two main crypto markets. But in the US, because we do have pretty clear regulation, there's a lot of things that US exchanges just can't touch. And so you see, Coinbase only lists a very small subset of crypto assets. And Bittrex lists a lot more, but I think Bittrex has the issue of like, they didn't have this like intense competition the way China does. And so like the Bittrex guys are great. The team is very strong, but I would say from a user experience perspective, from a liquidity perspective, like, Binance is pretty much eating their lunch. And now what becomes really interesting is like, will some of these Asian exchanges, successfully go global? And I think, to me, the one that has the best shot at that, at least for now, is probably Binance. But they've each kind of carved out these cool niches. So like, OK Exchange has this massive futures market. And it's the biggest cryptos futures market in Asia for sure. And, a lot of the miners use that to hedge risk. And so I think they're doing really well there. And like, that's a really profitable part of exchange. And so they're going to kind of, I think, continue to dominate that. And then, Huobi is focused, I think, on just owning the China market. And I think they're pretty good at that. Like, Huobi is a very like natively Chinese company. They're localized for China. That's their market. And then, Binance, I think, is kind of uniquely interesting just because they're the only Asian exchange that's really focused on going global. And, like, if you look at CZ's Twitter feed, like, it doesn't look like a CEO. It looks like a national leader. Like, he's like hanging out with, heads of state of these small countries, and he's getting, hanging out in Malta and Uganda and Bermuda and all these places. So I think, Binance has a chance of making this enormous global business. But like you said, like, Binance has only been around for like a year. And like, so they've a little longer than that, but they're still in some sense an underdog. I mean, they definitely have less on their balance sheet than the other Asian exchanges. Because in crypto, like, because these assets are deflationary and because we're not even close to full adoption yet, the earlier you start, you get a big head start. I mean, cause you're collecting fees when Bitcoin is really cheap. And so Binance from balance sheet perspective is still much, far behind. I just think, from an execution perspective, they're really, really fast. They've managed to hire extremely talented people. They have a really great team doing investment, the labs team. And they're technically very good. So, I think I don't think Asian exchange dominance is going anywhere. And it kind of feels to me like the world is just going to belong to, Binance on the one hand, and then like the really regulated exchanges like Coinbase on the other. Then you have this kind of like yin and yang for the space.
I think that's a really kind of astute point that Asian exchanges have in a lot of ways existed in a pressure cooker from day one, both from a regulatory perspective, but also from just a sheer competition perspective. I mean, I think maybe another factor contributing to the dominance is just like billions of people. It's just a numbers game as well.
I forget one Silicon Valley VC wrote this article that was like, Chinese startups just work harder. And he was talking about this like culture that he observed in China where like people would like, do tons of overtime and be sleeping in the office and like be working really hard. And he got a lot of hate for that. And people were like, there's all manner of hate was directed at him for this. And I was sitting there thinking like, it's pretty true. Like these Chinese companies that we know work insanely hard. I mean, they're extremely focused on shipping, and they have, like you said, they're in this competitive pressure cooker. And so I think that is an advantage. And we see that like, in Chinese manufacturing too, where like I have a friend who's been working on some hardware projects, and he was trying to manufacture them in the US. And the issue became like, he would just have all these weird experiences where like a US supplier would say, well, we're going to have this for you in like 60 days. And he's like, okay, like exactly 60 days? Or like, yeah, like 60 days, plus or minus 5 days, like we're working on it. And then he talked to a Chinese supplier, and they were like, we'll have this for you in 42 days. And he's like, okay. And they're like, yeah, like not 43, because like we're going to get someone on a plane and they're going to like carry these samples through customs for you because we found out that's faster. And so I think there really is like this culture of just like extreme dedication to shipping. And the weakness in China is I think there are less like super creative new companies coming out. I think on the protocol level, most of what we've seen in China is not super exciting, but on the infrastructure level where it's just down to like who ships faster, I think it's pretty hard to compete with them.
Just some data from my exploration of the space, because we work with a lot of exchanges, close here to being over 150 exchanges integrated with Nomics. But according to my research on this space, this is kind of interesting. About 10 months ago, we needed to integrate with 11 exchanges to get 50% of trade volume, exchange trade volume in the space. And now it takes about 40 exchange integrations to get 50% of the trade volume in the space. And of those 40 exchanges, about 36% of those were started in 2017 or later, and 11% of those 40 exchanges that account for 50% of the trade volume in the space, 11% were started in 2018. And all the newcomers are Asian exchanges, and almost all the top 10 are Asian exchanges. So it's super, super interesting space to watch.
Totally. And I think there's this like weird psychological problem in the crypto space. And that's like everyone always thinks they're too late. Like it's always like, someone's like, I bought Bitcoin at 100 and it's just too late. It's already done 100x. It's like, if I got there at $1 and then like 2 years later, they're sitting pretty happy. And I think the same thing is true in exchanges where people are like, oh, there's already all these big exchanges. Like it's impossible to start an exchange now. And it's like, if you look at the numbers, crypto adoption is still tiny. Like most people in the US do not own any crypto assets. And so, just from a pure numbers game, it's very clear that we're super early in this and that the market has not solidified at all. And so like, yeah, we're going to see a lot of consolidation around these big exchanges, but there's still tons of room for new entrants.
I think there's definitely a path to starting out with a vertical solution or, an industry specific solution and then bootstrapping your way into including additional crypto assets. So, I mean, we've seen kind of the top down approach where I believe, Bittrex started out with Bitcoin, started adding a bunch of new tokens, then announced that they're going to list security tokens. Coinbase has done the same, but you can go the other way. You can start out like Namebase, decide that you want to start including other assets that are maybe related, maybe other cryptos, or I don't know. There's lots of paths to, climbing up the ladder over time as you accumulate more users and more expertise and more resources. So there's still so much opportunity. And I think Binance is a great example of that.
Yep. Yeah, totally.
Okay. Second question. What other than exchanges and excluding token sales, which I'm not counting, who do you see making money in this space?
Yeah. So I would say we're definitely going to exclude token sales from this because that's not making money. That's basically taking on, almost like debt. Like if you've done a token sale, you now owe all of these people that you sold the token to an awesome product. And like, you got to deliver on that. And I think a lot of these projects won't be able to. I think exchanges are making money. Stuff adjacent to exchanges like wallets and OTC desks are also making a lot of money. I think we're going to start seeing, non-exchange products making money. But I think stuff like Dharma is probably going to be the first layer where it's like these slightly more complicated financial products like lending, that we see, working. And then like, there's a lot of people trying to crack sort of the like global remittances thing. And there's a lot of reasons why crypto is like not that great for that yet. But I think we'll see that starting to take off and starting to really work. And so like, I'm interested in kind of anything in that like financial infrastructure space.
Essentially variations on the theme of value changing hands and some sort of intermediary, whether it's a decentralized or not decentralized intermediary taking a cut. Yeah, I think that's going to be the business model here for the next few years, at least. Kind of going back to, Asian exchange dominance and growth hacking, just off the top of your head, what are the biggest moves exchanges make to grow? Like I've seen affiliate programs, they seem to work really well, affiliate or referral programs, and then just being as aggressive as possible about listing new tokens and essentially being like sort of the one place with a real user base for liquidity that has a token that you might want to acquire, and then that sort of grows the user base. Is there a third play that sort of comes to mind?
I mean, I think you got it. Like those are the main things. But then like the tricky part is always like, how do you cold start, right? Like how do you come out of nowhere and become interesting? And I think we've seen a couple ways. Some of them work better than others in the long term. So I'll talk about one that doesn't seem to have worked too super well is, there's an exchange in China called Fcoin. And they have this interesting model where like they actually rebate, 105% or 120%, some number more than 100% of your trading fees, but they do it not in the token that you're trading, but in their own token, which is called FT. And so what this very quickly, created was this massive incentive to wash trade. And so that's exactly what people did. And so like, we have a friend actually who he took 2,000 Bitcoin or 3,000 Bitcoin, and then he just traded it back and forth on FT until it was completely gone, until all the Bitcoin had been spent on transaction fees. He was getting those transaction fees back in FT, and he was getting more than the Bitcoin he put in. And so as long as he could then sell that FT, he could just make like essentially risk-free profit, day in and day out. And so he did this for like weeks and made, millions of dollars, just like wash trading FT. But then the problem becomes like, there's no real value for this token. And so the second people don't want to buy the token anymore, this whole thing collapses. And so like, I joked on Twitter that like, FT is like basically arbitrage on coin market cap advertising. Cause like you do all this wash trading. And so FT, Fcoin shows up as like the number one exchange in the world, for a while. And you got that for free. But now they're in this really tough spot where like they've created all these tokens, but like they got to make the tokens valuable somehow. And the token value crashed big time. And so like they're running from like model to model, trying to like desperately to make it valuable. So I think that's maybe an example of like, you pushed off, like you were able to get a cold start and people got really excited about this and made a lot of money. But then like now you're in this really bad position where you essentially have this like debt overhang where you have to somehow make this token valuable. I think, on the positive side, I think how Binance got started was pretty smart. And so like, Binance, they did referrals like everyone else. And so like back in the day, like Coinbase did, Bitcoin based referrals where if you referred someone, you got some Bitcoin and, it was a very small amount, but because it was Bitcoin, now it's like a lot. And I think that worked pretty well for them. But what Binance did with BNB is like they created this token. The platform token has a very simple model where like they buy it back with their profits. And then also it's used as a discount on the site. And so people kind of had an obvious, idea of why it would be valuable. And they did a small ICO and sold some of this token. And then they created essentially this like army of Binance missionaries that like were big holders of BNB and so had a huge incentive to make BNB appreciate. And those people referred tons and tons of friends. And so they were able to grow very quickly. And then they were the first people to list some tokens, like you said. But, I think BNB was like a really neat, way to kind of, cut people in. And I think we'll see more of that, right? Cause like even BNB, it functions as like a profit share to Binance, but there's no like actual, what I would refer to as like shareholder rights. And so you're just kind of trusting that they're going to keep it, good for their investors. And I think the Binance people are quite trustworthy and like, I'm fine with that. But, if they had to compete with something that had real guarantees, that would be interesting. And I think, for example, a decentralized exchange, that had a smart contract with a platform token could potentially do that. So I think we'll see a lot of interesting innovation there.
I think BNB is just a super interesting case study. It's one of those things where like at first glance, I was like, this isn't going to work. They're just issuing a token to raise money. But now I look at this and I love that BNB is like you get 50% off trading fees. So it actually has real value because Binance has liquidity. CZ is reporting that the majority of Binance employees are taking payment in BNB. Their venture fund is taking returns and burning BNB. Like it's just fucking incredible. Like they're actually making it valuable. And the market cap is $1 billion. And that's a fraction of what Binance is worth right now. So if you consider to be a reasonable proxy for equity in the company, which they may never issue, like this is basically like non-voting common stock, like it's kind of a good deal. Like don't buy this based on my advice, but I'm very bullish on BNB.
Yeah, no, BNB is really interesting. And I think like you can imagine like BNB is this like really rough prototype of what this could look like. And I think Binance, they're very into the decentralized exchange stuff. So I think they could take it in this direction or someone else will. But imagine like a token like BNB, but it's on a decentralized exchange. It's issued by a smart contract. And it gets a cut of like transparent cash flows from the decentralized exchange. Like then you have something really interesting because you've eliminated at least a big chunk of the counterparty risk. And I think like when people talk about security tokens, I like just get really bored and like want to go to sleep. But that's mostly because what they're talking about is like securitizing, tokenizing existing securities. And like that's cool. And like there's definitely going to be some neat stuff there. And like Bruce Fenton has some interesting stuff about this. And like I think it's going to be a thing. Like it's fine. But it's definitely not crypto. And it's just like not that exciting to me. But then like if you think about it, like these things are very similar to securities. And if you did have these like securities that are backed by on-chain cash flows, then you have something that's pretty fascinating. It's like deeply transparent and there's, much less counterparty risk. And so I think like that aspect of security tokens is really exciting to me.
Absolutely. I think there's an additional interesting facet of BNB, which is that I haven't measured this recently, but Binance has effectively bootstrapped their own quote currency. So there's a lot of different types of dominances that can be tracked in the space, exchange dominance, market cap dominance. But to me, like if you think of money as, a means of exchange, a store of value, and a unit of account, I think of quote currency dominance as measuring unit of account. And the fact that they have BNB pairs for like every single one of their coins and they're the top exchange instantly shoots them to like at least the top 5 in terms of quote currency dominance. And that's really, really compelling. And I think something that merits more analysis.
No, yeah, I totally agree. Yeah, BNB is really, I like it a lot. It's very cool.
Well, that's a wrap to Chapter 4. In Chapter 5, we discuss expectations for September. Eric, what do you expect to see in September? You mentioned some stuff coming down the pike from Zcash. Obviously, there's the Namebase and Handshake stuff. Is there anything else that you're particularly looking forward to?
Yeah, I mean, so supposedly Handshake is going to launch their mainnet in September. My experience with mainnet launch dates leads me to believe that might be delayed. But it's possible, and they're definitely going to get a lot closer. So there's a lot of interesting stuff happening on testnet. I think people are there's going to be a lot more like realization that Handshake exists just because they've been fairly quiet, and I think they're going to start being pretty loud. And so we'll see a lot of interesting stuff getting built on that. Like, I think someone's talking about making like a really interesting blogging tool where you can like with one click just create a blog that's hosted on maybe Saya and then, is fronted by Handshake. And so you have this like completely decentralized, static website. So I think we might see that in September. It might take till October to get that out there. I think, yeah, Zcash, like, Sapling doesn't go live until October. So there's not going to be a ton on that, but I think they're going to be, making sure that all the Sapling infrastructure is ready to go. Cosmos is doing a bunch of cool stuff. So like Cosmos still has this testnet going. And I think it'll be interesting to kind of see where the Cosmos thing goes. There's a lot of people building interesting stuff on Tendermint. And, I did like, I can't say which yet, but I invested, I'm like really anti-DApp and we don't really invest in dApps very often, but there was someone building something that I think is pretty clever on Cosmos Tendermint. And so I think that might be ready in September. So I'm excited to see that. And, other than that, like it's hard to make predictions. Like I'm surprised every time I read this. Every week I'm like, whoa, like they're doing that. Awesome. So, that's about all I can predict.
I saw a tweet from you around, so the topic of dApps, and you were mentioning a friend who was building something on top of, EOS. And I thought it was a really good point. I mean, what you were claiming is that sort of the app, if it sort of runs at scale, would be really expensive on top of Ethereum. But on EOS, it does make sense. And I was logging into my EOS account, or at least I was on a blockchain explorer kind of checking out my EOS account. And for the very first time, I got a sense for what a real world computer might look like. It told me the percentage, like it told me the amount of RAM I had on this world computer. It told me the amount of compute power. For the very first time, like this seemed real. Like, wow, I actually have allocated resources, in perpetuity as long as I'm staking these coins on EOS. And it was an eye-opening moment for me. It was really cool. And so I hope that a platform like EOS or the scalability solutions that are in place for Ethereum actually take hold, because I do think there will become a time for dApps. I don't think it's close, but there's something there eventually.
That's been always what I've been interested in with EOS, and like I've gotten a lot of flack for liking it. And I think there's a lot of claims made by, really, really crazy EOS bulls about it that I don't buy. But I do think that like for gambling apps, for gaming apps, it's a good use case. Actually, so I had like a super evil idea for something that would be fun to build on EOS or potentially ETH. That I think we can close out with. So I was thinking like, I imagine everyone's familiar with like FOMO 3D, but if they're not, like the basic idea behind this game that these guys made called FOMO 3D is it's similar to this game that was run in business schools for a while, where a professor will say, okay, I'm auctioning off $20, and if you bid on it, you have to pay whether you win or not. And so everyone will start bidding until it gets to like $19, and then at that point you're in a weird scenario, because if you've bid $19, you're going to lose that $19 no matter what. But if you win the thing, then at least you get the $20 back. And so everyone bids 20. And then the problem is now everyone has the incentive to bid 21, because even though you're going to lose $1, at least you're only losing $1 and not $21. And this game has actually run up into the thousands in these business schools. And so it's this like really interesting kind of human psychology exploit. And so FOMO 3D works in a similar way. Like there's a big pot of ETH and there's a countdown timer. And there's some complicated mechanics, but the simple part is the interesting part, which is every time you put $1 or any amount of ETH into the pot, the counter resets. And the price it costs to buy a key, which is like what resets the counter, goes up. And so this pot got really big. There was like $8 million of ETH in the pot. And the guy that actually ended up winning it performed this really clever sort of exploit on the bots. So there were a lot of bots that would like buy these keys. And he figured out a way to like sort of trick them into putting in the wrong gas price, and then was able to actually win the pot. But I was thinking there's potentially a really funny, like, again, kind of evil, version of FOMO 3D. So imagine you have two pots. So you can imagine it like a scale. And on one side of the pot is, say, a pro-choice cause like Planned Parenthood. And then on the other side is a pro-life cause. And people can put money into either pot, and there's a countdown timer. And the catch is when the timer expires, whichever pot has more gets both pots. And so what you imagine is like the more these two sides dislike each other, the more crazy they're going to go in making sure that their pot has the most money. And I can think of a lot of like, there's some fun ones. I mean, you could do like, UC Berkeley versus Stanford. My school, Peking University, has a rivalry with the school across the street, Tsinghua. So you could do that, but you could also make it, pretty adversarial.
Presidential fundraising, a whole bunch of things.
Yeah, right. Like totally, like next presidential election, like Trump versus whoever, you have these two pots. I kind of want someone to build this on EOS. Like if anyone's looking for a fun side project for EOS, go build this. Yeah,
so this could definitely go evil if it starts becoming like funds allocated to assassinations. But yeah, wow, that's super, like, it's a great human psychology hack. I definitely would get into that. Eric, as always, you've been extremely generous with your time. Thanks for creating Proof of Work. Thanks for spending time with me today. And just thanks for everything you do to contribute to the space. I appreciate it.
Yeah, thank you, Clay. This has been super fun, and I'm stoked to come back next month.
That concludes August's Proof of Work wrap-up. If you've enjoyed this and would like us to do this again, please hit us up on Twitter and let us know. And if you enjoyed this content, please be sure to subscribe to The Flippening on iTunes or wherever you listen to podcasts. Please also subscribe to Proof of Work at proofofwork.news. That's it for now. See you next week. That's it for this week. To sign up for our free crypto investing newsletter, listen to other episodes, or get the show notes from this episode, please visit flippening.com. I also invite you to check out the startup that funds this podcast, Nomics, spelled Nomics, at nomics.com. Finally, if you got value from the show, the biggest thing you can do to help us out is to leave a 5-star review with some comments and feedback on iTunes, Stitcher, or wherever you listen to podcasts. Thanks for listening, and see you next week.